Welcome to the Deep Dive. Today we're jumping into something pretty interesting happening in finance. It's about a company called Metallicus and, well, some news around them that kind of hints at where banking might be going. Specifically, how the traditional banking we all know and the new world of digital assets are starting to, well, actually connect in a real way. We're going to focus on things like compliant stablecoins and the blockchain tech behind them. Yeah, our main source here is this recognition Metallicus got recently. It's from Credit Union Times. And we want to use this deep dive to really unpack what that recognition actually means. Like, why is it important? Why should you care about this moment for, well, the future of your money? Okay, so here's what really caught my eye. Metallicus was recognized in the product innovation category. Fine. But the specific areas were credit debit payments and mobile banking. I mean, those sound super traditional, right? So the question is, how does a company that's all about blockchain tech get this kind of recognition in, like the bedrock categories of old school banking? It feels like more than just an award, it feels like a bridge being built or something.
That's exactly the point, isn't it? That intersection. And where the recognition came from is key. I mean, Credit Union Times, it's not just some blog. It's a really established, respected voice, especially in the credit union space, but also wider financial services. So for them to highlight product innovation in payments and mobile banking and point to a blockchain-focused company, that's a big signal. It tells you this isn't just theoretical tech anymore. It suggests that these institutions, often pretty conservative, right? They're now actively looking for compliant blockchain solutions. So yeah, it's not just innovation for innovation's sake. It's like a green light for bringing this stuff into the mainstream. It feels like the era of blockchain banking isn't just on the horizon. It's kind of already kicking off because companies like Metallicus are doing the hard work on the regulatory side. Honestly, it might be accelerating adoption faster than a lot of people expected.
Wow, okay. That puts it into perspective. It's not just theory, it's practical. Real solutions being implemented. The source mentions this validation of Metallicus building compliant, blockchain-powered financial infrastructure. Quote, that phrase itself, compliant, blockchain-powered. We hear those terms thrown around, sometimes almost like they're opposites, We get why compliant is crucial, obviously. But what does blockchain-powered financial infrastructure actually mean in practice? Like, what makes it different? Is it just secure ledgers? Or smart contracts doing things automatically? Or something else?
Yeah, that's a really important distinction. Let's break it down. So compliant is table stakes, right? Especially in finance, any new tech has to meet all the tough regulations if established players like credit unions are going to touch it. That's non-negotiable. But the blockchain-powered part, that's where the innovation comes in. We're talking about using things like distributed ledgers. That means records are super secure, transparent, really hard to tamper with. Immutable, it means using cryptography for security, which adds a really strong layer against fraud. And yes, potentially using smart contracts. These can automate stuff like, say, payment settlements or compliance checks, making things smoother, fewer errors, less manual work. So this infrastructure is built to be efficient, tough, and easy to audit. When people talk about bridging TradFi traditional finance and DeFi decentralized finance, this kind of compliant infrastructure is basically the essential foundation. TradFi relies on trusted central parties, banks, regulators. DeFi aims for peer-to-peer transparency, code-driven automation. So bridging them. It means getting the security and rules of the old system combined with the speed and new ideas of the new one. It's a tricky balancing act, for sure.
Okay, so it's a foundation that's new and efficient, but also super secure and built to play by the existing rules. Got it.
Yeah.
And the source mentions a couple of partnerships putting this into practice. First, there's one with DaLand. It says, this strengthens stablecoin infrastructure for better digital payments. This sounds like it connects directly to that credit debit payments category recognition, yeah.
Exactly. The DaLand partnership hits that payments piece squarely. And the key here isn't just payments, it's specifically stablecoin infrastructure. Stablecoins, things like USDC maybe, they're designed to hold a steady value, usually pegged to something like the US dollar, backed by reserves. That stability is absolutely vital for payments. It takes away the wild price swings you see with other cryptos, makes them usable for buying coffee, paying bills. So by beefing up this infrastructure, Metallicus and DaLand are essentially building the advanced plumbing needed for digital payments. Payments that are more secure, thanks to the blockchain's crypto security, but also just fundamentally more efficient.
Right. More efficient how, though? Compared to the payment systems we use now, is it just about making things faster? Or does this compliant stablecoin setup solve, like, a deeper problem?
It's definitely more fundamental than just speed, although speed is a big part of it. I mean, imagine cutting out intermediaries in a transaction. That could take payment times from days down to basically seconds, and potentially lower the fees quite a bit. That's the kind of promise stablecoins on a blockchain hold. Plus, you get the transparency of the ledger that makes things like reconciling accounts or auditing much easier, which is a huge plus for businesses and the institutions themselves. So, yeah, it's about bringing blockchain speed, clarity, and lower costs to everyday transactions, but using a familiar value, like the dollar. That makes it much easier for credit unions to actually adopt and see the benefit. It really boils down to making paying for things better, faster, cheaper, clearer for everyone.
Okay, that makes a lot of sense. So it's not pie in the sky stuff. It's practical improvements for how money actually moves. Now, the source also talks about another partnership. This one's with Velera, to launch something called the Digital Asset Lab. And it says this lab aims to drive blockchain innovation across 4,000 plus financial institutions nationwide. 4,000 plus. That sounds like, well, incredible reach. What's the appetite like from these institutions? Are they really eager for this tech? And what do they hope to get out of a lab like this?
That number, 4,000 plus shake, is definitely eye-opening. It shows this isn't some small pilot program. It's aimed at wide adoption. And this digital asset lab with Velera, that connects directly to the mobile banking recognition we talked about. When you have over 4,000 institutions exploring blockchain, it means they're seriously looking at how to upgrade their mobile banking services. And we're not just talking about, tweaking the app interface. This could be about integrating things like instant cross-border payments right into the app, or maybe using blockchain for stronger digital ID verification, better security, less fraud, or even offering things like tokenized loyalty points through their mobile platform. They're looking at back-end efficiency to faster settlements, that kind of thing. And maybe even offering new digital asset services down the line, but in a safe, compliant way. So this lab, it acts like an incubator, really, a safe space for these institutions to learn, to experiment, and figure out how to integrate blockchain into what they already offer, especially mobile banking, making sure it's compliant, easy for customers, and actually adds real value.
Okay, so let's make it concrete. If I'm running a small credit union somewhere, what's the first thing I might realistically explore in this lab? Are we talking simple stuff like faster internal transfers or something more customer-facing?
That's a great question. For a smaller credit union, the first hook could be different things. Maybe it is about enhancing security for mobile transactions, that's always huge, or making their own internal processes run smoother, like reconciling accounts between branches using a shared ledger. Maybe even faster, more transparent loan processing. But for their members, the appeal could be offering instant payments, domestic or even international, right from the mobile app, and likely cheaper than old methods like wire transfers. That's a big potential win. Or exploring better digital identity solutions to make signing up online easier and safer. It's really about giving these credit unions, big or small, access to tools that maybe only the huge banks could afford before. Helps them compete, stay relevant as everything goes digital. It's kind of democratizing access to this next-gen tech for a massive part of the financial sector.
All right, so one partnership, DaLand, is tackling the payment plumbing with stablecoins, and the other, Velera, is creating this huge educational and R&D hub to push innovation into mobile banking for thousands of institutions. It really does sound like a very strategic, holistic approach, not just one product, but building the whole ecosystem needed to connect TradFi and DeFi.
Absolutely. That seems to be the core vision described in the source, building that complete bridge. And doing it through compliance, through actual innovation, and through tech that can scale up. It's about taking the good parts of DeFi, the efficiency, the transparency, maybe the lower costs, and weaving them into the trusted, regulated fabric of traditional finance. This isn't really about replacing banks or credit unions. It's more about giving them powerful new tools so they can serve you, the customer, better. And this pragmatic focus on things like compliant stablecoins for payments people actually make and exploring digital assets carefully, that's what will eventually change how you interact with your own bank or credit union day to day. You might see faster payments, better security, maybe even lower costs down the line. It really is reimagining what traditional institutions can do in this new digital asset world.
Yeah, and it definitely seems like that pragmatic, forward-looking approach is hitting the mark, given the recognition from Credit Union Times. That phrase, "the future of digital banking is being built today," really sums up what we've been talking about. It's not science fiction anymore. It's happening right now in these specific partnerships, these specific innovations, setting the stage for what comes next in finance.
Indeed, it's happening right now, in the code being written for compliant infrastructure, in the stablecoin networks being strengthened for payments, in these labs where thousands of institutions are getting hands-on. So yeah, it's more than just a tech story. It's about how trust and usefulness are evolving in financial services. It shows the industry isn't just watching anymore. They're actively building a future where blockchain benefits can be used safely and reliably by everyone. These collaborations are not just about cool new features. They could actually streamline things, cut out some old banking steps, make credit unions more competitive, and ultimately it could give you more direct control over your digital money within a system you already trust.
Okay, so let's quickly recap this deep dive then. We've looked at Metallicus and this credit union times recognition for product innovation in really traditional areas, credit debit payments and mobile banking. And it's clear this isn't just a pat on the back. It signals that companies like Metallicus, working with partners like DaLand and Velera, are actually building that critical infrastructure, the compliant blockchain-powered foundation connecting traditional finance, TradFi, with the new world of DeFi. This recognition highlights a real shift happening now in financial services, paving the way for how you'll likely handle your money very soon.
Exactly. And that brings up a final thought, something for you, the listener, to chew on. As you see your own banking change, maybe new app features, faster transfers, think about how these behind-the-scenes innovations might be starting to affect your everyday life. Because the future of digital banking is being built today, right now, on this compliant, blockchain-powered infrastructure. Consider how this might soon impact your mobile banking app's speed, the security of your payments, maybe even entirely new services your credit union starts offering, services that could give you more direct say over your digital finances. These developments, even if they sound a bit abstract now, are laying the groundwork for how you will interact with money tomorrow, not years from now, but likely much sooner than you think.
That's a great point to end on. Really makes you think. Thank you for joining us on this deep dive into this really fascinating intersection of old finance and new tech. Keep exploring, keep asking questions, and we'll catch you next time on the Deep Dive.